All right, VIP traders, welcome back. These are the trading ranges for Monday, April 14th. And let's start with SPY. The implied move for tomorrow is between 519 and 548. And the 30-day average volatility and Tuesday's implied move is 515 to 553. And you can pretty clearly see the momentum that we have here tomorrow. We have this 30-minute 200 moving average above us. We have this down gap from last week. This was Thursday. And we did get into that a little bit on Friday, closed just underneath this down gap. So above that 30-minute 200 moving average, then the top of the implied move, 548, 553 on Tuesday's contract, and then we have this massive down gap. Also, the 35 EMA on the weekly time frame is up here. That is a really big level. But let's bring it back down to within our trading range. Underneath us, we have the 35 EMA. On Friday, we dipped down to it and came up to this down gap. So 35 EMA underneath us, 519 on tomorrow's contract, that's the bottom of the implied move, and 515 on Tuesday's contract. So on the bottom, we have $4 wide spread. On the top, it's a $5 wide spread. You don't have to trade the full length of the spread, but I have found it to be a little bit more successful when you take that entire spread rather than doing a maybe $2 spread off of 548. So if you are a spread trader, try it. You definitely will see what I'm talking about. So then underneath us, the next true support is going to be right around here, and that is 494. And let me zoom out real quick to the 1 day, just looking for anything else to add. On the 1 day here, we do have a bullish cross up. We do have this 35 EMA coming down on the 1 day time frame. I don't have that within the trading range, but do know that it is coming down and it will be a resistance. So that actually could give strength to the spread that's at the top of the trading range. And weekly candle here, we do have that 35 EMA. It is not within our trading range tomorrow, but it is within the week, something to look for. Heavy downward momentum, big red signal line here. And really quickly back to the 30-minute time frame here. Futures in ES are up 1.12% right now, and just look at where that takes us into the trading range. The trading ranges are massive. Volatility really expands it. So where futures are at right now takes us right to the middle of this bear gap, right underneath the 30-minute 200 moving average, which is facing downward. And SPX, implied move tomorrow here is between 5215 and 5500. Then the 30-day average volatility and the implied move on Tuesday's contract line up 5170 to 5545. And here again, ES is up 1.09%. So that would take us at open right here just underneath this 30-minute 200 moving average and into this bear gap. The implied move itself is 2.61%. So we're up just 1%. We're about halfway up the implied move. When volatility spikes, the trading ranges expand. And it's deceptive. They look the same as any other trading range, but they are much wider. So 5170 to 5545 on Tuesday's contract. I think I backtracked a little bit. Let's start over. So futures take us right here. This is the down gap from last week, and above that 30-minute 200 moving average. The top of this bear gap right here is 5460. 5500 is the top of the implied move, 5545 on Tuesday's contract. So nice $45 wide spread here. Then we have this massive bear gap right here from the start of last week. So weekly 35 EMA is on top of all of that. And then to the downside, 35 EMAs right here. And then we have 5215, 5170, which is also a $45 wide spread on the downside. Both of those look really attractive, and honestly, I'm considering doing an iron condor right at open, taking advantage of both sides, looking at that momentum coming into the middle, and then the next support underneath is around right here at 49.50. So not a difficult trading range if you know what's in it. QQQ. The implied move tomorrow is between 441 to 467, 435 to 472 is the 30-day average volatility, and 437 to 471 on Tuesday's contract. Very similar setup here. We have this down gap from last Thursday where we gapped away from this 30-minute 200 moving average that's facing down. So down gap and then 30-minute 200 moving average. The top of the gap is 463. 467 is the top of the implied move. That does line up with previous resistance. 471 on Tuesday's contract. 472 top of the 30-day average volatility. Top of that bear gap at 476. Underneath us, 35 EMA. Thursday and Friday, we did see a little bit of support there. 441, bottom of the implied move. 437 on Tuesday's contract. 30-day average volatility takes it a little bit wider near the support from last Thursday, and the next true support is down here at 414. So again, here I am looking at this setup, and these spreads look pretty decent. At open, I may take a spread that is, I would actually probably take 437, 435, 471, 472. So sell the Tuesday's implied move strike, buy the 30-day average volatility strike. All right, and IWM. Implied move for tomorrow, 178 to 190. That is from options. 30-day average volatility, and Tuesday's contract 176 to 192. To the upside, we do have this down gap from last Thursday. It is a really big down gap. It takes almost the entire upper half of the trading range, and 191 is right there at the top of that down gap, and that's the top of the implied move, and we have the 30-minute 200 moving average right there. So without a doubt, I am looking at 191, 192 bear call spreads. That's a perfect setup up there. And right now, IWM or small caps futures are pretty flat. So I think that to be able to get up here with any kind of decent premium, I'd probably do both sides, but you'd have to get that pretty early on, because if we do open flat or stay relatively flat, that's just going to start burning up as soon as the trading day starts. Underneath us, 35 EMA. We did chop around it after getting pushed back. So 35 EMA underneath us, bottom of the implied move 178, Tuesday's contract 176, and DIA. DIA, we only have weekly contracts. So this is the implied move on the week. It's 385 to 418. And above us, we do have a little bit of this gap left here. So top of that gap is 404 and a half. So I'm going to round that up to 405. That's going to be resistance. And 30-minute 200 moving average above that, facing down. Typically, you don't want to go long at a downward facing moving average. So if we do get above this, we might see a pullback down. Bear gap above that at the top of the trading range here with a downward facing 35 EMA on the weekly time frame. The 200-day moving average up here, I think that's what it is. Yep, 200-day moving average. The 1 hour is up here. I haven't adjusted that in a while. It's probably down here somewhere, but you know what? Let's just go add that in there because it might be in our trading range. It is. The 1 hour 200 moving average definitely should be in here. All right, so the 1 hour 200 moving average is in now. It is in here, so there is a ton of downward pressure at the top of DIA's trading range. So underneath 30-minute 200 moving average, and we do have support at the very bottom of the implied move. So there you have it, guys. Really fun looking start to the week. I know I'm pretty excited about it, and have fun tomorrow. Trade safe. Make sure you take profits when you're up. I will see you guys tomorrow night.